Hello, everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and what a crazy trading week. We talked about it last week on how the expectations of an election result and interest rate announcements could cause a lot of volatility. I didn't think it'd be like that. I thought we'd see a lot of whipsawing back and forth. This was pretty much one directional. We had the NASDAQ up over 5%, the S&P up 5%, the Russell up over 8% for the week. Holy shnikes, what an amazing week. Well, will this week be any different? Oh yeah, it'll be a lot calmer. Of course, we don't have a presidential election to go through or an interest rate announcement, so it's going to be a much quieter week. So I will start you off with our normal. We're gonna start things off with our earnings calendar. Now, we've seen all the big stuff out already, and you're looking at the bottom of your screen here thinking, Merlin, 1,915 companies. There's gotta be some big names in there. Not really. You have BYDDY, that's BYD Motors, on Monday. Now, they were supposed to report last week, but of course, it's a Chinese company. They'll report when they feel like it. You have Live Nation. On Tuesday, you've got Home Depot, Shopify, AstraZeneca, and Suncor Energy. Wednesday brings you Cisco Systems. And then Thursday, Disney, Applied Materials, Sony, JD.com, and rounding out the week on Friday, we've got Alibaba. And that, my friends, is it. Not a lot really going on. With 1,900, you would think a lot of other big names. Most of it is international. Now, we shift our focus to inflation. Now, inflation is an interesting topic because if you watch the 10-year bond over the last 2 weeks, actually, let's say the last month, the markets are clearly pricing in inflation. We've gone from about 3.6% on that bond to 4.5%. That is 90 basis points in just a couple of months. That's a huge move up in yield. What that means is the cost of capital for businesses is surging. That could start to slow things down. Now, the good news for our market practitioners here is the yield curve, which was inverted, meaning the short-term bonds were paying higher yield than the long-term. That's not the way it's supposed to be. Now we're back to normal. As of this week, the 10-year bond is now higher yield than the 1 year. That's usually what the yield curve is. Some say it's a 10 and the 1, some say the 10 and the 2. We'll go with 10 and the 1. If you follow Bill Addis, who's the king of bonds, and you can take his Canary in the Coal Mine focus course, he'll say it's the yield curve is a 10-year and the 1 year. And you know what? I'm going with Bill Addis on this one. All right, let's go into that inflationary data for the week and for the month. We'll start with the year over year, actually. If you look at this picture here, you can see we've got the consumer price index number coming out Wednesday at 8:30 a.m. Eastern time. This is the year over year picture. Now, right now, it's sitting at 2.4%. The good news for all of us as consumers is we've seen that slowly trickle down. You notice the last 8 or 9 bars have been getting lower and lower and lower and lower. This is a good thing. We want to see this getting lower and lower, showing us that the cost of goods and services are not rising as much. Of course, the Fed has said they want a 2.0% target on this one. Right now, we're at 2.4. Now, let's take it a little bit further. Instead of looking at the year over year, let's look at the month over month picture of consumer price index numbers. And you can see for the last 3 months, we've been stuck at 0.2%. Now, of course, if you annualize this, meaning you take the monthly data times that by 12, you'll get an annualized rate. It's 2.4, which is right where we are at today. So all in all, not a horrible number, but the bond market, like I say, is really pricing in higher numbers. So will we see these numbers start to surge? Well, maybe the producer price index can help us out with that one. On Thursday at 8:30 a.m. Eastern time, the PPI numbers come out, and as you can see on this chart here, they have been relatively flat over the last 3 or 4 readings as well. So the good news is overall inflation is rather low. The concern is that it may start to move up. Now, right now, the expectations are that CPI is going to come out at 0.2%, right where it's at currently, and also PPI at 0.2%. So all in all, it looks so far like everything is okay. Now, looking at the future pricing of bonds, that would lead me to believe that maybe starting in January or February of next year, these numbers are going to start to curl up, and that could lead to more, let's say, trepidation about rising inflation. Of course, we're months away from that. We still have the whole Santa Claus rally to go, so let's keep on moving forward. Now, lastly, consumption drives our economy, and of course, retail sales is a good measure of that. We also have a couple of major retail sales numbers coming out in the next week. Friday at 8:30 a.m. Eastern time, we get our retail sales numbers, and all in all, not fantastic. You can see that it's been somewhat flat over the past few months. 3 months ago, we had a nice surge up to 1.0. Previous month was 0.4. Ideally, we'd like to see something above 0.4% here on that retail sales number on Friday to kind of juice this market and convince everybody, or at least let everyone know that people are actually out there spending money. Now, another interesting piece here is what happened after the election results. When we saw those election results come out and Trump was elected president or elected president, what we saw was consumer discretionary, meaning spendable money, disposable income, buy what you want, surging. Was one of the better performing segments of the market on Thursday and Friday of last week. So we'll see if that continues. That's a good sign that spending is coming in, or at least the expectation of spending is coming in. And this number on Friday at 8:30 a.m. Eastern Time may help us get a clearer picture of what that looks like. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.